time to do business again. We have 25 minutes this time around. Welcome to Business Incorporated, and here's what we have prepared for you. We have our eyes on Nigeria's equities market. Is it a dead cat bounce, or has this recovery come to stay? We'll discuss. And Zimbabwe economic reforms has received a lot of applause from the AFDB. In Kenya, the central bank is looking for 40 billion shillings, and they hope to get it from investors. Welcome to the program. I'm Ini John Mekwa. Let's do business. Beginning from the oil space, prices fell for a second day on Thursday as an industry report showing rising crude inventories in the United States, which is the world's biggest crude consumer. That has reinforced concerns that global supply is more than ample to meet current fuel demand. Market sources citing American Petroleum Institute figures said that the U.S. crude stockpiles rose by 1.3 million barrels in the week ended November 7. Gasoline and distillate stockpiles, they dropped, according to the same sources. So looking at the numbers for this afternoon, it's turned green, different from what we had in the morning. So for Brent this afternoon is 0.4% in the green. $62 is still the level, $62.98. WTI is also in the green, 0.41%, $58.73 a barrel. Also, prices fell more than $2 a barrel yesterday after that announcement by the Organization of Petroleum Exporting Countries. That's their monthly report. And we see that there's a bit more stability now with the signing by President Donald Trump to begin spending in the United States. In the metal space, gold prices rose for a fifth straight session on Thursday to hit its highest in more than 3 weeks. And it's buoyed by expectations that the U.S. government's reopening will restart the flow of economic data and boost bets for further interest rate cuts. So we see 4,200, really close to the record high that we've had so far, which happened this year. So it's $4,215.87 per ounce. For U.S. gold, it's 0.2% in the green, $4,219.90. Spot silver is 1.4% in the green, $54.15. Platinum is unchanged, uncertain at this time, but palladium also joins the other metals, and it's up 0.8%, $1,486.28. Of course, we know that President Donald Trump has signed that legislation ending the longest government shutdown in the history of the United States. And now to other stories coming from the African continent. The African Development Bank has commended the government of Zimbabwe for implementing what they call robust economic reforms that foster the conducive environment for investment and sustained economic growth. AFDB Executive Director for Southern Africa Group, the second constituency, Dr. Eugenio Mario Paulo, made his remarks after paying a courtesy call on the Minister of Foreign Affairs and International Trade, Professor Amon Muraya, in Harare. Dr. Paulo highlights that the ongoing reforms have positioned Zimbabwe among the region's fastest growing economies, and a whole lot is being expected from that. The Central Bank of Kenya is seeking to raise 40 billion shillings from the public for government budgetary support. The sale involves a 15-year bond and a 25-year bond, which are being reopened for new investors. This means that the reopened fixed coupon treasury bonds were previously sold before and are still active in the market. The Apex Bank says that the sale period runs from November 11 to November 19, 2025, and investors who take part must make their payment by November 24, 2025. The 15-year bond will earn investors 12.34% interest each year, while the 25 bond will pay 14.19%, with both earnings taxed at 10%. The proceeds from the bond sale will be used for general budgetary support, even as the government continues to rely heavily on domestic borrowing to finance fiscal obligations. Now let's talk about seasoning, especially back here in Nigeria. Of course, the women would know this better, but everybody needs seasoning in their food. So let's discuss that this morning. Competition among seasoning manufacturers in Nigeria has become more intense. However, the average price of, for example, a 360-gram pack has increased by almost 27% that we have seen. And so let's discuss what might be driving this and a whole lot more with Ajibola Ayodeji joining us from Victoria Island. Hi, Ajibola. Good afternoon. Once again, welcome to the program.
Good afternoon, Amy. Thanks for having me.
So we are both women, so we can get real on this one and leave the men out just for a bit. So one would have thought that as minute as seasoning, seems to be in the scale of things, that this constant increase in prices will not touch it. Unfortunately, it doesn't seem like it has escaped that.
Yeah, talking about seasoning is a staple in Nigeria household. It's everybody, almost everybody, let me not say everybody, every household in Nigeria consume it, and the demand for it we can say it's relatively inelastic. So irrespective of the price increase, people still go for it because many people love using it. Because I think because of the convenience of using it, the affordability, and over the years people have, should I say, attached themselves to using it. So to just cut themselves off using it will take time. So people still continue using it, and even in the short to medium time, I don't think the price might even increase more because the consumer consumption of it does not respond to price. However, in recent times, we have seen people tilting towards using natural spices because of increased health concerns and health consciousness amidst people. So we have seen people, and also people that are using some people have also reduced the quantity they are consuming as before. They are resumed what they are consuming now as against what they were consuming before. However, the price still remains the same, or the price might even increase because of the nature or the kind of the good it is. It is inelastic demand.
Yeah, but what's driving the price increase? Is it the ingredients? Because if you say that the supply or the manufacturers are increasing, then supply should be increasing and it should reduce the price. So what's causing this movement in price?
Okay, we can say, even though we are seeing like inflation, we have seen for like 6 months now, inflation has been coming down. However, the materials that is used in producing these things, some of them are imported. It's not natural, it's not domestically sourced. Some of it are imported. So the cost of bringing it in is there. Then that's one. Another thing is there's a lag between when the resources comes in and when the production is made. So their inventory, they are just using it. So we might not really see a decline in the price because there's a lag between when the inventory comes in and when it is being produced. So they have to be able to get their costs and their profit and their costs together before they can also say they want to reduce the price in order to maintain their own revenue and their own profit margin.
So are consumers not looking at the alternatives? You did mention the fact that some Nigerians have become more health conscious, and so they're looking at the natural spices. Isn't that also reducing, or isn't it supposed to reduce the pressure or the demand on normal seasoning?
Yeah, it's supposed to. But as I said earlier, I said a larger percentage of people of Nigerian household are still consuming seasoning cubes, and even these alternatives, the price is even more in the market. For example, talk about ginger now. The price of ginger between last year and this year has increased by above 100%. So even going towards these natural spices is even more costly. I would say it's even more costlier than buying these seasoning cubes. And also looking at garlic, fenugreek, and others, so they are even more costly compared to using. So people are weighing they are going for, okay, let me say, consumer preference. So they are weighing their consumer preferences and they are weighing their pockets, consumer income has to do with consuming all these natural spices, and weighing between consuming it and consuming the seasoning cubes.
All right, Jibola Ayodeji, analyst with Financial Derivatives Company. Thank you so much for your time.
Thanks for having me. Good afternoon.
Good afternoon. So let's head to the markets now. It's still more good news coming from Nigeria's equities market. At intraday, we are almost 1% in the green, 0.99%. And yesterday we closed at 145,000 level, but today we've gone to 146. This was taken about an hour ago, so I just want to believe that we are up to 147 now. I do hope so. But we have Nabila joining us now. Nabila Mohammed is a banking sector analyst with Chapel Hill. Perhaps she can give us a hint of more current numbers. Nabila, good afternoon and welcome to the program. How's the market now?
Good afternoon. Thank you for having me. So currently intraday, before I entered the show, we noticed that the market was already up around 1.13%. And we're seeing, strong interest in names like Zenith, in MTN, and these are like large weight market cap stocks that, would largely move the market at the end of the day, should they sustain this interest through the trading session today. So we're seeing a bit of buying interest, and this is just investors understanding that whatever happened the day before, that's 2 days ago, that's particularly on Tuesday, it's largely as a result of panic selling. And we are starting to see people that understand that the fundamentals of these companies that are listed remains right. So the prices being depressed is just an opportunity for them to position themselves ahead of the potential rally that would, reoccur when we start to see clarity around the news flows that, sort of spurred the panic selling in the first place.
Interesting that you put it that way, because I mean, when two trading sessions ago, I saw more than 8% drop in the banking counter. I was really worried, but I mean, saying that they're also driving the recovery gives a lot of comfort to the heart for, stocks like Access Core, which we know is a major one of the fugas.
Yes, exactly. So for Access, we are also seeing it up today. In fact, yesterday it gained, closed at 22 naira versus the 20 naira that it dropped to on Tuesday. And today we're seeing it trade within the band of 22 to 22.95, just in terms of what we're seeing from the trading desk, from our trading desk. And it just shows that people understand that this stock is a potential stock that should be had, investors should have in their portfolio, because we're looking forward, being one of the biggest from a total asset standpoint, it means that it would have the opportunity, or the ability rather, to translate that total asset size into earnings, and that is the next phase for Access as we go into the following quarters.
More attractive to investors? Is it the dividends, or is it just the trading and making profits on the market?
So I mean, for Access, yes, since the day that it was announced, sometime around in October, we noticed that the share price has actually dropped by circa 14%, and that is largely as a result of the fact that they did not declare an interim dividend, which is the first time for Access in the past 10 years not declaring interim dividend. And that was largely as a result of the fact that Access is a holding company, and there is a prudential regulation for holding companies, financial holding companies, to have their, their minimum paid up capital above the sum of its subsidiaries. Simply put, Access Holding PLC has subsidiaries, so the minimum paid up capital of each of these subsidiaries combined should be lower than what the holding company's minimum paid up capital is. Now, if you do not meet up with this criteria, then you would be among the financial holding companies that will be unable to declare interim dividend, and that's what happened to Access when they published their H1 results, and we didn't see them declare interim dividend. Now, management has already explained that they are already making efforts to make sure that they cover that shortfall, which is around 10.99 billion. And when they cover that shortfall, they will be able to, pay final dividend for FY 2025, and that would, sort of boost investors' confidence again, because For a dividend-paying stock like Access, it is a surprising thing, of course, to have it not declare interim dividend just like its other peers. So it was nothing, it had nothing to do with their forbearance because they have actually made provisions for their forbearance, for their forborne loans, because we saw them, record a 9.6 times quarter-on-quarter expansion in impairment charges. And even during the investor call, management did explain that just spoke to the fact that they were able to cater to that forborne loans, issue. It was because of that prudential guideline that, deterred them from paying interim dividend. But they are looking forward to paying a final dividend for FY25, and that should, improve investor confidence in the stock. And besides, as I said, the stock is already up, even intraday and yesterday as well. And that just speaks to the fact that there are investors that are seeing the potential that the large asset base will translate to in terms of earnings in the coming quarters.
Yeah, so I mean, outside of Access, looking at the sector generally, so we know that all of these are closely linked to macroeconomic headwinds and decisions. I mean, we've seen what happened with the capital gains tax and all of that. I wonder how much of this can we connect what you just explained to the realities on ground, Nigeria's current macroeconomic realities?
So I mean, yes, we will not rule out the impact that the whole lack of clarity around how the CGT would be implemented affected the stock market. That is also, in fact, the major news flow that saw some of our large cap stocks tank on Tuesday to low levels. But then again, these companies have their own respective, should I say, strategy in terms of going forward, in terms of how they intend to run their business in the current macroeconomic climate. We understand that FX is stable, so we see that with FX being stable and market rates gradually coming down, it will mean that for the banking sector, they would have to now start lending more because it looks like the macroeconomic space is favorable for businesses going forward. So why not lend more to, improve and, deliver on their mandate of lending to key sectors of the economy. So I believe that as we go into FY26, we should see them improve in terms of their loan books, just lending to key sectors, just to, make up for the drop that we're seeing in rates in the market. And I'm sure with the sustained disinflation that would likely, go on for the months October and November, we may likely see that the MPC will decide to cut rates further. And if that happens, it will mean that, yes, interest rates will likely come down as we enter FY26. So the banks would have to lend more to, be able to sustain their margins going forward.
All right, Nabila, thank you so much for giving us all of that, especially giving us update from the market, and enjoy the rest of your day.
Thank you for having me.
Let's look at other markets now. South Africa is also in the green zone at intraday, more than 2% up. And then NGX, that's for Egypt, slightly up 0.1%. And for Nairobi, closed negative yesterday, and they've lost the 190 level, unfortunately, now on 187. Looking at the Middle East, it's all red today at the intraday. Dubai is down 0.48%, Abu Dhabi is down 0.35%, Saudi Arabia 0.37%, and Qatar, even worse, 0.85% at intraday. We move to the United States, where I guess there's a lot of relief with that signing of reopening of the government. So we can expect the Dow Jones and the S&P to be green. But the NASDAQ has other drivers, the AI bust and the fear around that, conversations around that. I believe that has kept the NASDAQ in the red zone, so it's in the red 0.26%. In Asia, where market has closed at this time, we see that shares mostly rose after what has happened in the United States, from the Nikkei of China, Kospi, South Korea, Hang Seng 0.56% in the green, as well as the other parts of the Asian market also in the green. Let's find out what's going on in Europe with last good afternoon. Government is open in the United States. I know that should slip or sweep into the market over there in EU.
Yeah, Ini, good afternoon. Yeah, everything that happens in the US is usually a hot topic here too. Not so much today, actually, and I almost wish we had spoken a little earlier because we had a friendly market opening here. We saw some more green across the board pretty much, but now just over the last hour or so, the market has actually gone down. In Frankfurt, the DAX right now losing about 0.5%. And it's kind of ironic because we do actually have some strong numbers that could have supported markets. Deutsche Telekom, Germany's largest telecommunication provider, and also Siemens, the big industrial conglomerate, they are talking about record profit. They are actually, despite the difficult environment they are working in. So lots of good news, actually, but markets down. Then again, not a total surprise, of course, Ini, because as so often, you buy on the rumor, you sell on the news. So I guess that's where we are today.
Yeah, I wonder what the latest news is, but the rumor we can certainly hear from the underground last. But I mean, we hear that Germans will have to work for longer in their lives. What's going on?
Well, you know, this is mostly an initiative intended to solve one of the problems holding Germany's economic recovery back, the lack of skilled labor. Now, before we're getting into the details here, Ini, one should know that in Germany, the retirement age used to be 65 and is currently being lifted to 67. But still, even at 67, the government thinks that maybe not everybody should retire. And the reason for this is purely demographic. Germany has a relatively old population with an average age of almost 45. Compare that to some other places. In Nigeria, the average age where you are is around 18, as far as I know, and in Africa in general, it's just under 20. That means that lots of young people are coming into the labor market, something sometimes way more than are retiring. And here in Germany, it is quite the opposite. The baby boomer generation is currently retiring, and there are not enough young people coming into the labor market. And even with immigration, we can currently not make up what we're losing.
So, Lars, I mean, you just painted a picture in my head, especially, of course, we know that we have the younger population in Africa, especially here in Nigeria. And once people see this conversation, I'm sure they'll be applying. Don't worry, you don't have to extend your retirement age. Nigerians can come there and all of that, as we've always done. But what are they offering, you know, these individuals to work for longer?
Well, you know, it needs pretty much money, of course. Making extra money in retirement used to lead to a downward adjustment in retirement benefits. Now, that was pretty unattractive, but that fell away a few years ago. And now the additional income that people can make is actually tax-free up to 2,000 euros a month. And that seems to seal the deal for many. A survey we just had found that 53% of Germans between 60 and 70 now would be willing to consider working an extra few months or even years under these current circumstances. And that is just so important, you know, not necessarily in those often discussed future technologies, but very much in industrial jobs, in engineering jobs, or in many of the traditional trade jobs, whether you're talking about a carpenter or an electrician. There's a lot of jobs where people have gathered decades worth of experience. They know the ins and outs, all the tricks of the trade, and losing those people is losing a lot of knowledge and expertise. So keeping them on now gives us a bit of a breather. However, like I said, in the long run, given the demographic realities in Germany, the country will need more young people in the workforce. And in the long run, that means we will have to get better in bringing in qualified immigrants and giving them jobs faster and easier.
Yeah, true. But I mean, the other thing, Lars, is you have to keep these older people healthy for them to still be useful to the economy if you want to keep them longer working. But, I mean, I'm sure they have all of that planned into the package. Thank you so much for bringing this to us, Lars.
Let's hope that is taken care of as well.
Thank you, right? All right, Lars, thank you. So now let's head to the crypto space. And I believe we're in the red, unfortunately. So we had that 104,000 for more than 24 hours, at least that level. But unfortunately, we've lost that now. In 24 hours, Bitcoin has lost about 1.75% of its price. Ethereum has even recovered a bit, because I saw, I think, late yesterday, it was at 3,400. So it's back to 3,500, but obviously still in the red. We've seen better days for most of these prizes. Let's see the stories making the headlines. At this time, we start from CoinGlass data. The cryptocurrency market was hit by a massive wave of liquidations this week. No wonder we see the red. More than $362 million in leverage positions were wiped out in just 4 hours, and the sharp downturn was primarily driven by a significant sell-off in Ethereum. We saw a price dip. We saw that below the 3,004 for the first time this month, and the sudden price drop was compounded by a series of market-moving events leading to cascading liquidations across various digital assets. That's the first story. The other is Spain's securities regulator. They said that it has fined social media platform X €5 million for failing to comply with rules governing advertising of financial products, including cryptocurrencies. The regulator had launched an investigation in November 2023 after detecting advertisements on X promoted by an unauthorized financial company. They call it Quantum AI, which was marketing cryptocurrencies on X. And then we move to Japan. The Japan Exchange Group is considering stricter regulations for DAX companies amid sharp stock declines, including Metaplanet's 75% plunge from June's high. And despite early year gains of 420%, highlighting persistent market volatility, the possible regulatory overhaul reflects JPX's response to investors' losses and extreme swings in the digital asset treasury sector. So those are the main stories from the crypto space at this time. And that's it on the program. Thank you so much for being a part of Business Incorporated. We do appreciate your presence, and we hope that you will go to our YouTube channel and watch this program and Business Morning all over again. I'll see you tonight with the green markets. Bye-bye.